You're listening to the Wisdom for Wealth for Life podcast, brought to you by Blue Trust.
Welcome to our Blue Trust podcast today. My name is Stephanie Adams. I'm a private wealth advisor in our Dallas-Fort Worth location. And with me today is Greg Gilbert. And Greg, I'll let you introduce yourself.
Yeah. Hey, Stephanie. Hey, everyone. I am Greg Gilbert. I'm the managing director of our Atlanta office, and I am also a senior private wealth advisor and a partner. And I get the opportunity to serve clients, many of whom are leaders in business or small business owners. So the things we're going to be talking about today impact them on an ongoing basis, and have seen it front and center. I also am married to my wife, Lisa, and we have 3 kids, and just excited to dig in with you today, Stephanie.
Yeah, it's great to be here with you. And like I said, I'm a private wealth advisor in our Dallas-Fort Worth location, and I'm excited also getting to serve business owners and multi-generational family businesses that have been passed to generations, and just to help. Today we're talking about family money, and the goal of our conversation today is just to help bring clarity and confidence to business owners and entrepreneurs who are kind of grappling with the distinction between family money and business money, and kind of the lines that we find get blurred sometimes. So we just wanted to have this conversation to bring up some of the issues that we see and how some practical ways that we talk through and navigate these issues with clients. So today, just to give a high-level overview of Blue Trust, we are a firm. We've got 17 offices around the country. We've got some new initiatives, which is what I'm working on in Dallas-Fort Worth. So we are opening new offices. We've got a new office starting up in the DC area, Northern Virginia, and other parts of the country. So we're excited to be a firm that's growing. Lord has blessed us over the past 45 plus years. Ron Blue started our firm in the late 70s. He was challenged by Dr. Hendricks with Dallas Seminary to start our firm to help Christians become financially free to fulfill the Great Commission. So we are still on that mission today, and we've got over 450 employees. We serve over 10,000 families across the United States, and we've got over $65 billion of assets under advisement. So we're excited to bring what we've learned over the years working with clients. And Greg mentioned she's got over 2 decades of experience serving business owners and entrepreneurs, and I've been in the business about a dozen years. So we've learned some things, and we're still learning. Each client teaches us new things. So we're continuing to grow and learn, and excited again to be here today. So Greg, maybe I'll let you kick off with what are some of the issues that you see most regularly with clients who are business owners and just navigating life on the personal financial side and then the business financial side?
Yeah, great question. I mean, I think if you take all clients, one of our core ideas is that everyone needs financial help. So everyone needs financial help. Everyone's trying to figure out their finances in a fast-paced world with lots of options, lots of confusing ideas, anxiety around what's going to happen and what's the right thing to do. But then if you take business leaders and business owners, it's almost amplified. It's like a bigger deal in some respects, because there's a whole nother entity that is being led. And there's a whole nother entity, maybe a whole nother area of financials and growth and employees and people and just all these other things to think about. And sometimes getting your arms around the business can be hard enough, much less how's it happening and what am I supposed to be doing personally? And if I'm married with a family, how's all that work? And it can be really overwhelming. I think an analogy is it's like a big bowl of spaghetti, and you've got the business finances and the personal finances. And sometimes as a business owner, you go to the personal finances. If the business needs money, well, one of the first places you may go is to the personal finances. Or if you're making personal decisions, what are wise decisions, not knowing what the business may or may not be able to do, and not knowing how the business finances may flow into you personally. So it's this big bowl of spaghetti that sometimes doesn't have healthy boundaries around it. Sometimes there's a lack of clarity. And if you've ever been in a dark hotel room and you're kind of getting up in the middle of the night and you don't really know. Like, you kind of know where the bathroom is, and you kind of know, but you're stumbling around a little bit. How powerful would it be to have a light shining, just the right amount of light? You don't want to be freaked out, but the right amount of light to show you and illuminate where you need to go. And it would be so clarifying, right? And so peace giving. So imagine we're walking through this hotel room in this space that we don't know in our financial lives and in our personal lives. And all we needed sometimes is a little bit of illumination around creating some clarity. Another big issue with business owners and other types of people, they don't necessarily have to even be business owners, different types of profession, is there could be seasonality, just meaning when cash flow or income hits in a certain time of the year may not be normal. It may not be the same every single paycheck. There may be a base salary and there may be a bonus. And with a business, there could be distributions. There could be trying to figure out, where things are settling out for the end of the year so that some planning is being done from an income standpoint by the end of the year or what have you. So irregular income is enough challenge for a business, much less how you bring that over to your personal finances as well. Then there's tax planning in the mix of that. How is that going? There's boundaries, as I mentioned, personal versus financial, and that can become a really big idea. And one of the things we'll talk about is how does that work in relationships? How does that work with communication and trying to get marital harmony with a spouse who may have different perspectives and different ideas about what brings peace and what brings clarity to them?
Yeah, we find that a lot of times there are just questions that kind of end up bubbling to the surface for our clients in this situation of grappling with managing the cash flow of a business, managing your personal cash flow at the same time. So one thing we often harken back to and start the conversation with all our clients, regardless of being business owners or not, but it's do you have written financial goals? And more often than not, most people have never thought about that and have these goals that are kind of in their minds and kind of floating around and like, oh, I'd like to do that, or like to do this, or I'd like to be here when I'm X age. But in terms of writing it down and having something to anchor back to when there are decisions to be made, we just find it's really important to have written out financial goals. And for married couples, that they are agreed upon, and that having the conversation to even get to a point of writing those goals can be a really meaningful exercise and helpful in terms of managing the line between business and personal finances. So another question we ask is, are you managing your cash flow effectively? What does that look like? There are many pieces to business operations and the tax component on the business side and the personal side, retirement contributions, payroll, potentially out of an S corp situation where you're paying yourself and or your spouse, and navigating what does that process look like? Do we have our CPA helping us calculate that? How frequently does that need to occur? How do the retirement contributions flow into that process? So just the whole management of cash flow is a constant ongoing conversation and navigation that we're helping clients work through. Are you appropriately allocating your assets and liabilities? So when we talk about having debt on the business, and then we think about having debt personally, so mortgage, maybe car payments, maybe all kinds of different types of debt. What's the balance there? How are those strategically being thought about, being paid down? What's the right amount of leverage to have between personal and business that you as a family are subjected to? So just a lot of different considerations to think through when it comes to the debt and assets, different sides of the balance sheet. Are you on track towards saving for the future? Again, back to having written financial goals. It's one thing to have this elusive thought about what you want the future to look like. But if we never write down goals, there's nothing to help keep us on track, to know if we're on track for saving for the future and planning for the years ahead. Another thing we think about a lot with clients, or try to help our clients think through, is what happens if you become incapacitated? What happens in the event of an untimely death? And what happens to the business? What happens to your family? What are the guardrails and the procedures and processes in place if something unexpected were to happen to the owner of the company or the owners? What's the succession plan process that's in place? So that's another critical question that we often bring up with our clients, and a lot of times help discover and explore different solutions for those scenarios that play out. And then another critical question is, do you have someone who knows your whole financial situation in the event that something unexpected were to happen? Who can help your spouse navigate the road ahead in the event that, something were to occur, whether it's a temporary issue or a permanent issue? Who's someone in your life that has full knowledge, understanding, you've walked with for a period of time, that knows your heart, knows your goals, knows your family, and your spouse is comfortable seeking out their counsel going forward?
Stephanie, if I can add one thing, with you just covered some really key areas, and I often will hear, and what we talk about is, do you know what your finish line is? How much is enough? So everybody needs to be kind of identifying that at some point and working towards that. Especially helpful for business owners as they think about, is this a lifestyle business? Am I selling for an exit? If so, what's the number, and how does that translate into my life, in my family's life, as it relates to being financially independent? And so that's a big goal. And so when we talk about some of these goals, the first thing we always encourage people to do is to go to God. Like, what does God's word have to say? What are the roles of your life, and what does it look like to honor him in the midst of those roles? And then off of that, what are then goals that are in alignment with what he's called, that will speak into the ways that you want to set goals in the direction that he's having you to go, and maybe having your family to go. And so if everybody starts there, then we're starting kind of Proverbs 16:9. We're seeking his ways and letting him direct our steps. And then we're out of that place, we're writing down goals that he has for our lives. And if we're married, then our spouse is joining us in that. And then that creates more alignment, because obviously with marriage, it's so much is going on. So alignment is really, really hard to get in any relationship. But if we start with what God is sharing to each of us, and then we're bringing that to each other, hey, this is what I'm hearing. Hey, this is what he's put on my heart. And let me look at your list, and let me share mine. And then what does that mean for us together? And then we go into the financial world of, okay, there's some blocking and tackling that are these potential areas of focus that we're going to talk about, of, do you have goals, and are these things taken care of? Or are there just areas in your financial life right now that are a little bit out of control, that you're lacking? It's on your mind, but a lot of the work that Stephanie, that we get to do with our clients, is in this area that Stephen Covey would call a quad 2 in the book. It talks about areas that are important, but not urgent. They're important, but not urgent. And they're on people's minds, but you know what? It's not necessarily on their action list for the day. It's not on their schedule list for the day. It's not the ringing phone that's there. And so there's not necessarily an urgency to get the estate documents done, to get the proper amount of life insurance in place, to determine how much is enough so that they know what they're saving for on an annual basis, to consider what God wants to say about, what does generosity look like for us? How do we want to give? And do we have written goals around this? So some of what you share just really unpacks some important nuggets and some important areas that I think are really critical for people to think about, for business owners to kind of go, okay, I'm doing all this business planning, but now if I come over here in my personal life, and maybe in the life of my family, have I walked through this? Because it's not easy to. And so we have 4 keys that we're walking through. And this is the number one key, is having a tool like this in place to really help you create clarity around goal setting.
Mm-hmm. Yes. And this is a really simple table to fill out, but it helps just, again, anchor all of us into what are those specific goals and milestones that we are aiming to reach, and how do we know along the way if we're making progress towards those and hitting those goals. So simple thing, increase emergency fund. Okay. Did we accomplish that at the end of last year? Are we at this $150,000 amount, or are we working towards that still? Are we at 75? Creating goals with saving for kids' education, eliminating debt. Again, you mentioned, Greg, just what's the role of generosity, or where do you want to be in terms of generosity with your personal finances, and then on the business side, how do those work in tandem?
So Stephanie, let me ask you something on this. So we're talking about goals. When you talk to a potential client, let's say, or a new client, how often or what kind of level of goals do you usually see from a financial standpoint? Or is that something you're really helping them to kind of get in place? Like they have ideas of maybe some things that they need to address, but how clear are their goals typically when you're starting to work with someone?
And most people do not have written goals. A lot of people come to us and I think realize, I want help. I need help. I want to be in a place where I'm stewarding my resources in a way that's honoring God. But in terms of practically writing down goals, or kind of getting that thought process out of their mind onto paper and having a tangible, practical go forward plan to accomplish those goals, identify and accomplish the goals, is usually not in place.
Yeah.
So we're day one having those initial conversations of whiteboarding, getting thoughts out of the heads of our clients and their minds and hearts, and helping to bring clarity and just parameters around what's in your mind, what's on your heart, and how can we set measurable goals to start working towards. Is that what you find, Greg? Or
yeah, well, and the other challenge is, as we know, financial planning exists because there's always more options than there is money available, right? So there's always more options for money to be spent on. And so there's less money for that to go towards. And so the goal setting is, how do we prioritize what is most important for us? What is most critical for us? What is front and center? And sometimes I think people also are like, well, should I do this or that first? And sometimes you can accomplish multiple goals, but it's helpful to know where you're going and have a roadmap. It's helpful to know how much is enough and what's the context for my saving. What's the context for giving? And do I have a good plan in place to make sure I'm effectively paying taxes? Like, what do I need to have in place so I'm not surprised by that? I think some of this rolls together for business owners, where I've got a client that a few years ago, when they were trying to get things organized, were surprised by a tax bill. And when the tax bill came up, the business owner, leader, husband in this case, was thinking about everything that was on their net worth, like rental houses and their house. And he's a real estate agent, and they're doing development, and they have their own home and debt. And he just saw it as one big thing that we can just move parts around whenever we need to, right? His wife, on the other hand, who was very sharp and involved in the business and all of this, was like, tax bill. He goes, hey, we can just pay for this out of the home equity line of credit. She was going, no. That's our house we're talking about. So in her mind, there's a segment between their house, their checking account, that's money we have to spend, savings, that's like emergency reserve, paying down personal debt. Like, these are things that it was almost like, if you kind of said, hey, what's in your world and then what's in the business, there would be that separation. Going back to the bowl of spaghetti, now we're starting to kind of say, okay, there's boundaries around the personal finances. And now that speaks into the goals that need to be set as well, and bringing them together in harmony. So gosh, the goals are so critical, because sometimes people can even know what they're wanting to aim at, but there's multiple goals. So they don't necessarily know what sequence or what order to kind of approach them in.
Yeah, that's really good. Just makes me think about a lot of times when we're dealing with husbands and wives in this business ownership role and debate of how to manage personal finances with the business. It's a lot of times, more often than not, the husband is, allergic to cash and just doesn't want to sit on cash.
Right.
And so we think about developing an emergency fund, or even just a margin for cash reserves, increasing that just for the unknown. A lot of times women want that number to be significantly larger than men want it to be, and don't have a problem with sitting on, a pile of cash. for some period of time or a long period of time, and just feel more comfort in that. And, have a number in their mind that when I log into my checking account, I want to see X amount in there, and that will give me peace of mind, will let me sleep better at night. And so kind of just navigating those conversations and figuring out, how to balance those two perspectives on cash specifically.
Yeah. And I think that a lot of what we're talking about also flows into our next slide around our next tool that we're going to do, which is our steps to investing. And I think a great setup for this is it kind of goes step 1 through step 6. This is the order of things. It would be things like number 1, step 1, identify where you are on this chart. First of all, everybody's on this chart somewhere. Boxes you've checked off or boxes you're still working on. So am I working on this box or have I already checked this off? So one would be debt. Especially in this case, we have high interest, in short-term debt, but even longer-term debt could be on there. How are you doing with debt? The second and third are more of talking about cash, emergency reserves, kind of core savings, that if something happens, I've got money in my checking account, I've got money for emergency reserves. Like that's kind of step 2 and 3 together. Step 4 is, am I preparing for upcoming major purchases? Which seems foundational, but in businesses, sometimes that's not happening. And in our personal finances, are you saving for the next car? Are you working to pay down debt? Or do you have, some furniture you're purchasing or a vacation that's coming up or what have you that you're really preparing for in advance? Step 5 then is, once we've done all these other things, we want to start saving for that financial independence. We want to have longer term savings going on. And then step 6 is speculation. So those are kind of like, where are you in these? What we found during the tech bubble, it was interesting. People would be buying these runaway, high-flying tech stocks. So step 6, speculation. But the question would be, or even looking at the situation, some of them still had debt. Mm-hmm. Some of them may not have had an emergency reserve, which was step 3 that they needed to have or wanted to have. Step 4 is, did they actually save for the things that are coming up in the next 6 months to a year? Maybe not. And step 5 is, were they saving adequately in long-term diversified savings for being financially independent? And so what happened was almost people were jumping to step 6 without taking care of steps 1 through 5, which is what we would say would be the reverse way that you'd want to do that, rather than having step 6 being in context of knocking out some of these other areas. Mm-hmm. So, Stephanie, as you think about the steps to investing, what are a mistake or two that you have seen or experienced with some of the clients, and maybe even business owner clients that you've worked with? Because business owners, like you said, they're allergic to cash. They see deals everywhere. Mm-hmm. So 6 is where they like to live. Speculate, yeah. Because I see the opportunity.
Yeah. High risk, high return.
Yeah.
Reward. And it's a lot of times when we've seen clients be successful in that speculative bucket and maybe have a huge pop in an investment that they put very little in early on, and a few years later it just blew up and just happened to happen to walk away with a lot of proceeds. And so there's this drive to always create this 10x return on 10x plus on all your money. And without taking into consideration the prior steps, which is, let's establish a healthy amount of cash to have on hand. Let's establish, what does an emergency fund look like? What are you saving towards your retirement in a strategic, methodical way that's consistent? What are the boring, steps of investing that aren't as exciting as investing in venture and private equity and your buddy's deals and real estate, rental properties, all the exciting things that can have certainly high rewards, but you are taking on a lot of risk. So we do really try to help clients think through each individual step that we have here, and the importance of each one as we're helping to plan for the future and think through what's the best way to provide for your family, and also to not negate things like generosity and paying down debt and things along the way that contribute to your whole financial picture.
Yeah. And so this is the second tool. The third's going to be the net worth, which you're going to unpack for us. But as we think about this area, I've also seen people think about what you call boring, I would almost say, are foundational steps to investing that is more passive in their mind. So if I'm a real estate expert and that's what I do for a living and I'm building homes or I'm development, well, honestly, you should be making the most money right there. It's concentrated. I wouldn't even call it speculated. It's just that's what you do for a living. You're bringing your time, your talent, your expertise, kind of the whole of you and your history and your experience to bear, along with capital. Obviously, it's represented on your net worth as a business, right? Or properties or what have you, in order to move the needle on value. Honestly, that should be the highest performing aspect of your net worth, right? It should be.
Right.
Now, we also know that concentration could have risk. We also know that cycles exist. And we also know that these things take time, energy, can create stress, anxiety, because it's work. I mean, you're bringing a lot of work in order to move that needle. And so sometimes I can see that they're not understanding diversification and liquidity being just having money available for spending or for being financially independent. And it's just a different thing. So this over here, where they're working with their network and their expertise, is active. And what we're doing for them is it's active from our standpoint, but for them, they're not necessarily moving the needle on it per se, which is kind of a new experience for some people. They're like, I've always moved the needle with my time and my know-how. And this is different. If I'm invested, in a diversified portfolio, if I have cash, if I have money markets, if I have private real estate, if I have, the types of investments that are going to be growing in a diversified way over time. So it's just a different bucket and it's apples and oranges. So sometimes I think they want to say, well, this is better than that. I'm like, yes, that is better probably most of the time and should be because of all those reasons that we just talked about. So this is just different. So with that as kind of a setup, walk us through the importance of the third tool, which is having a net worth.
Yeah, it's really just of utmost importance. I don't think we could reiterate that anymore emphatically. That so many times when we talk about, hey, with clients or prospects that we're talking to, have you ever seen a one-page document that summarizes everything you have, everything you own, and everything you owe, all on one sheet of paper? And who is keeping up with that and tracking that over time? And again, we find that if you don't have this information that is being consistently updated and kept up with, how can you possibly make meaningful and really fully educated and informed decisions around your finances personally or on the business side? So this is a really critical tool to start with in order to begin the conversation of planning for the future. And really, it's a snapshot of all the financial decisions you've made to date. At any point in time. It's just like getting blood work. If you're going to the doctor and you're getting tests run and blood work done, it's really up until that point in your life, it's a reflection of every health related decision you've made to that point. And it's the same with a net worth statement, a cash flow statement. It is a diagnostic read on your financial picture. And it's critical in order to make decisions around. And a lot of times with business owners, we see that the business side over years, and sometimes we start working with people who are far down the line in their business cycle and have developed a business that has tremendous value. The issue is that a lot of times that value cannot be extracted in the form of liquidity. So it's not something you can just pull money out as needed on the personal side. So we like to help clients think about a plan to, hey, how do we over time start to add diversification to your financial life? How do we start pulling some of that value out of the business and creating other pockets of cash, pockets of retirement savings, investments in other industries, private and public sector, to give you a more well-rounded portfolio? Because, as you mentioned, Greg, there are cycles, there are economic issues always at play, and global issues domestic issues. And the markets are always uncertain. So we don't know, what's coming. So we just are always talking about the importance of diversification. And this net worth helps us to anchor as a starting to that conversation.
As I think about the net worth too, it's like you're saying, it provides visibility, like we're saying, just illuminating what you have. And when we work through with a client, we always say everything on your net worth needs to have a purpose. And if it has a purpose, it typically also has a timeline. Like if you're in your home, you may have an idea of how long you want to be there. If you have cash on hand, you may know why is that cash there. Now, if it's for an emergency reserve, we don't know when that may come. Obviously, that's why it's an emergency. But we want to have it in case it's needed next month, right? So it really is short term in terms of when it could be needed. Retirement is building towards being financially independent. So that one's a little bit more, timeline. So when we go through, we should have a purpose for everything on your net worth. And I think some business owners will do their personal financial statement, is what they call it, when they give it to a banker and they need loan, or if they're, needing something within the business or needing to secure some kind of capital funding for the business, they'll pull one together. But having it and then having somebody walk you through, all right, now what's happening with all of these things? And are we segmenting this well in terms of separating what your business ownership is and what your business situation is from your family and your personal finances? And so an analogy I like to use is this should be like on your dashboard of your car, right? Like I'm not a mechanic, but I need to know how much gas there is in the car, right? If I were driving down the road and had no idea how much gas there were in the car, that'd be a problem, right? If I didn't know how fast I was going because I didn't have that in front of me, that would be a problem. So having the net worth, and then even when we get to the next tool, what we'll be talking about, and some of these 4 keys that we're talking about today are just having the right dashboard in front of you so you're able to make better decisions. And obviously we would say having somebody help you can be really important because everybody needs financial help.
Yeah, I think just the key of intentionality, and like to the point of just having a purpose, being intentional. When we think about stewardship, that's the number one critical thing to start with, is how are you being intentional around each piece of your financial life and each component of your net worth and each component of your debt side of the balance sheet. So just that, to your point, just to echo, intentionality is so critical.
Yeah, it's good. So you want me to tee up 5 uses of money?
Yeah, love that.
All right, 5 uses of money. So if we're thinking about, we just talked about your net worth, everything that you own and anything that you owe. That's kind of a snapshot in time. But this is more on the income that you have coming in. What kind of income or sources of multiple streams potentially of income? You may have more than one. And then where's that money going? And we like to say there's 5 uses of money. It can really only go to one of 5 places. Biblically, we would say the first place is to give God what he's due and what we want to out of our hearts and generously. So generosity is number 1. Number 2 would be pay under Caesar what's Caesar. So we got taxes. Don't necessarily want to pay more than we need to. So we want to think through that wisely, think through that well and plan strategically, but we want to pay taxes. 3rd is debt. So we pay everyone what we owe them, and we want to make sure that we're on time and aware of the debts that we have. So after those 3, now what's left is the final 2, which would be living expenses, which are annual living expenses, things that are happening year after year after year. And then we also have savings. So really that would be what we call margin. So what do we want to have saved and captured for the longer term? So those are the 5 uses of money. And the reason why this is so important is, where's your money going? And so what is the plan in this year for the income that's coming in? Do you know what the income is that's coming in? And as we mentioned before, it can be seasonal. It can be varied in terms of when it actually hits during the year. So what's your plan for that? You could have a really great plan on paper for this year of, hey, I'm going to have $150,000 of income and $125,000 of expenses. But what happens if of your $150,000 of income, 75 of it comes in the last 3 months of the year, while a lot of those other expenses are hitting earlier in the year? That causes a problem. It causes a cash flow problem. Mm-hmm. So being on top of when things happen is also really important. But this is the 5 uses of money. And so then from there, you want to have a plan for, do I know what all these numbers are? So Stephanie, what are you what are you thinking about as you kind
Well,
of?
and I think just to tie in the first two, really giving and taxes, as a business owner, there are so many opportunities to creatively tie giving with tax optimization. So there are strategies with giving portions of your business or giving away, all kinds of different strategies that we can help share with business owners. If you've got other opportunities beyond just writing checks to your church and charities, there are other ways that you can save a lot more on the tax front potentially. That we can creatively kind of brainstorm together and think about, okay, how can we increase generosity while reducing our tax bill? There's just a lot of opportunity there that makes that an exciting lever to pull for business owners.
That's awesome. And so if you take these 5 uses and you apply it to the cash flow, then essentially it's a lot of numbers on a cash flow. But what we really have found to be helpful is to do what we call a 5-year cash flow, where we say, hey, in the year that we're in, what's the inflow? What is the income that's coming in? And then for this year, what are the outflows? And maybe there's some major purchases on there. Maybe there's a car being purchased. Maybe there's a special vacation. So having visibility, again, is so important, and it's foundational. But without it, again, you're driving a car that doesn't know how much gas is in, and you're trying to get to, wherever it is you're going on vacation. And even if you have enough gas in the car, but if you don't know, that still creates anxiety, doesn't it? So even if you're going the right speed, but you don't exactly know what your speed is, then that creates anxiety. So having clarity around this is really important. And so there's not just the year that you're in, but we like to look out next year, 3 years, 4 years, or 5 years so that we see what's coming. One of our principles is, with a longer term perspective, you make better decisions today. So if you can make really good cash flow decisions with a 1-year visibility, imagine if you have a 5-year visibility, or maybe even a 10-year, and how much is enough, what your finish line is, what your plan is for aggressively paying down debt if you're not already there. And with all these things, like we talked about with goal setting, with your net worth, with the steps to investing, and with your cash flow, if you can get aligned and aware with a spouse, if you're married, that is huge, because you may be in different places. You are in different places in terms of how you see the world, how you look at finances. And so being more on the same page is really valuable. And it doesn't mean that the other spouse, sometimes we'll say some spouses, and it depends on the team and how they partner together, but sometimes one will say is less financially involved, and that's fine. But there's still some kind of inclusion in terms of decision-making and harmony and just awareness, even if it's a higher level, that can be really helpful for the couple just being aligned together. So cash flow helps you know where the money's going, helps you know how much is coming in, helps you have an awareness of it. And then therefore you can be intentional with decision-making. So it elevates your decisions. And by looking further out, and especially the next few years, you see what's coming. Okay, we're saving up for a car. We're saving up for that family vacation, or we're paying down that debt aggressively in the next 3 to 4 years. That's helpful to know. That way, if new money comes in the current year, I don't go, hey, we just got new money and we don't really know what the context is. And so we just go spend it on something which may be fine, but it actually could have worked better towards some other things that are coming right around the corner, that just because we weren't looking around the corner, we didn't even know about and weren't aware of. And now we're surprised and we've been, oh, I wish I would have known that. I wish I would have had that clarity.
And it all just ties together with establishing those written financial goals, as a single person, as a married couple, early on in a relationship working with us. And then we can constantly be bringing up those goals and thinking about your net worth. Let's look at your net worth statement for the past 5 years. Let's look at the progress that we've had there and be able to tie that directly to goals. Let's think about your cash flow for the next 5 years. How does that tie into the goals that you're trying to achieve? And a lot of times when we are the accountability as the financial advisor team, the wealth management team, we are helping our clients move forward every year towards achieving their goals that God's laid on their heart, that you've shared with us and that we've written down and that we continue to bring up And it's all just tied together. And then going forward, it helps to, when you do have unexpected proceeds come in from the sale of a business, or just unexpected success in a business one year, what can we do with this extra cash that we have, or just extra capacity to give, or however that looks. But we can help give a lot of peace of mind, even to a spouse who might not want to be super involved necessarily in the financial conversations on a month in and month out basis. But I think having those written goals to anchor back to gives peace of mind, and gives something to anchor back to on an annual basis with both spouses in the conversation.
And it also makes me think sometimes the cash flow for, let's say, the non-financial spouse or the spouse that's not in the business can be a bigger deal. I mean, I think sometimes a business owner client may have done a personal financial statement. They may be a little bit more aware of their net worth, but sometimes that number doesn't mean as much to the spouse, because they're like, well, that's great that this business has increased in value, but we don't have enough money to pay for our taxes. Or, that's
Right.
great, that investment that you think is just doing really, really well. Sales are going on, and it was a risky investment, but it seems like it's doing really well today. But we can't spend that to go on vacation, right? So
Right.
sometimes I feel like the cash flow could even hit home a little bit more for the spouse that's not in the business. I don't know what your perspective of that would be.
No, I totally agree. Yeah. And again, just hearkening back to the benefit of having things written out. And while this cash flow can feel like a lot of numbers on a spreadsheet at one time, it intricately works out. Okay, everything that's coming in and everything that's coming out, and things that business owners tend to just forget or not realize. There's payroll tax implications. You've got to pay Social Security tax and Medicare. You have to take payroll a certain number of times a year, or you've got to have money in the bank, cash in the bank, to be able to contribute to your 401k. So as we think about the breakdown, it's helpful to have it outlined in detail so that there's no line item is forgotten or left out, and everything is accounted for, and there's a plan in place in a really detailed fashion that can bring both spouses peace of mind.
Yeah, that's great. So we talked about goals as a key tool. We talked about steps to investing. We talked about the net worth. We talked about the cash flow. So those are the 4 keys, but I think you have a slide that kind of pulls the whole financial picture together. Kind of walk that through for us.
Yeah, and this is our financial house, we call it. So you'll notice that there's the foundational component of our investment management process, and thinking through, okay, as a business owner, you are investing in your business. So what is the process around strategically, methodically thinking through how do we continue in the investment process in our business? But on top of that, we think through, there's really 4 pillars. You've got short-term goals, long-term goals. You've got your legacy planning. So we think of that in terms of your estate plan, your succession plan. How does that interplay with life insurance, potentially long-term care insurance, that kind of long-term planning, holistic long-term planning. And then just other things that come up. There's always this bucket of miscellaneous items that we are thinking through with our clients. So that includes taking care of aging parents and thinking about, again, strategic giving. There's so much opportunity for business owners to think about giving from a different lens and different opportunities, not just cash giving, but all kinds of other opportunities to give. And then we think about, okay, when you do sell your business and you're transitioning out of being the owner and the startup guy and the running the business, and now you're selling it, and what's next in life? So kind of this halftime transition. What's post selling the business or moving away from the business in such a larger capacity. So we think about just this house diagram and think about the pillars, the foundation, and then ultimately the goal is to have peace of mind, clarity, and ultimately we want our clients to feel free to make decisions that have eternal impact with what God's given them, in the temporal realm. Do you have any thoughts, Greg, on that?
Yeah, no, I think that's awesome. The way that you laid that out is perfect. I mean, bringing all of those categories. And sometimes I think about when we work through step 1, 2, and 3, short-term plans, that's kind of how we're taking action today based on the long-term plans, though. So if I don't have long-term plans and I'm taking action today, that's good, but I may not know directionally where I'm aiming at, right? So having the long-term plans helps set the goals and the targets. And then the estate and insurance, I think one question I would have for everybody listening in is two things. One, when is the last time your wills were updated? Like, can write that down. Do you know when the last time your wills were updated? And for a lot of people, it's longer than they thought. It might be 15 or 20 years or more. And usually things have changed. Life has changed. Financial situations changed. The children or grandchildren, those situations have changed. So when was the last time? And then also, how much would be left to each? Like, do you know what would be left? And are you also including insurance in that? Because sometimes people think about their net worth and they forget that they had a few $1,000,000 of life insurance as well on the outside. And so what could go wrong is if they have a lot of the money going to kids when they're in their early 20s or mid 20s. And what we want to do is have an estate plan that helps them, but doesn't hurt them, that has wisdom and guidance and design thoughtfully kind of laid out. So just a couple of questions there on that side. And then if you're thinking about long-term plans or you're acting on the short-term plans and you're taking care of estate and insurance, you know who to call, your spouse knows who to call, then really that fourth bucket is life is going to throw surprises at you. And sometimes we think of surprises as being abnormal. And I think what we've learned is surprises are normal. Like, when's the last time your week went exactly how you planned it? Or even a day? Like, when's the last time you're like, that day started and finished exactly like I thought, right? It's rare that happens. So life is always throwing changes and adjustments and surprises at us. So if we plan well, the value is in actually that we know what's important to us. We know where we're heading so that when life does change, we're better able to make wise decisions because we've already been thinking about what matters. We've already been thinking about what we want to take care of. So that fourth one is really important. And I think the planning helps prepare you to make wise decisions in that. And then it's supported by having a strong portfolio that is going to help you achieve your goals over time with a compounding value, of interest upon interest, and the leverage that creates over time. Yeah. We say these things work best when the planning investments work best when they're integrated. So having an integrated plan is really important. So that's what I would add to that, Stephanie.
Yeah. And then just kind of to tie it all out is in terms of who is the team that is helping you as a business owner think through all these things for your specific situation, who's helping you be intentional as a steward and thinking about, okay, let's think about generosity. Let's think about cash flow, net worth, taxes, and life insurance and estate planning, all the things we've touched on really high level today. But who's the person in your life who is responsible for thinking about that for you and bringing that topic to the table for you to think through and design plans around short-term and long-term. So we really think, well, when we work with clients, a lot of times they already have some professionals in their life. A lot of times our clients will have a CPA, they might have a bookkeeper for their business or a CFO for their business. And then they might have an insurance person who's doing their property and casualty, and they might have a life insurance person and might have an estate planning attorney, might have a business attorney. And so our role really evolves into being this quarterback person of, all right, we've got to get on a call and we need to have your personal CPA. We need to have your business CFO. We need to have your bookkeeper on the line. And this ties into your estate plan. So we've got to get your attorney on the line. So we are really the quarterback role of getting all the people to the table at the right time to help you as our client and business owner make strategic decisions.
Yeah, it's when you talk about that role, it's really important. So people usually do have a financial team, and they may not love everybody. So there may be some that they love, a couple that they love, a couple that they're like okay with, a couple that they actually have thought about changing. that they feel like they need more. They just haven't made that move yet. So what we love to do is plug and play with the existing financial team. But a lot of times what people lack, and maybe why we would be helpful, is we come in and we help provide a long-term financial strategy that's comprehensive. It takes all the areas, comprehensive meaning all the areas of your financial life, planned out over time. So we help them develop that to make sure that they're going to be on a healthy financial road. So we do that. A lot of times they don't have that from a comprehensive perspective. They maybe have an insurance plan from the insurance agent. Maybe they have a current tax plan from their CPA, but usually they don't have that. So that's number one. And number two, they often lack someone coordinating all of these professionals in one direction. So if we can set the direction, then what we do is we help coordinate the ideas, the strategies, and the plan with the CPA. So this afternoon, I'm meeting with a client. It's a developer client, small business owner, experienced a lot of growth in recent years. Newer client, and so we're getting on before we even have a detailed financial review with him. We're bringing the CPA in, and we're just touching base on, hey, are we where we need to be with his taxes, with the estimates? Do you have what you need from us? And so that coordination helps really be a little bit more proactive in communication, which helps things be planned better. So long-term strategy, make sure you're on a healthy financial road, and having somebody in the middle to help coordinate that, we found to be very helpful.
Well, thanks for joining today, Greg, and being on this conversation with me, and just hoping to share some helpful nuggets with our listeners today on thinking through family money, business money. How do those two things interact? How can I steward what the Lord's entrusted to me as a business owner, an entrepreneur, and family member going forward?
Thanks, Stephanie, for tag teaming this with me, and just for everyone out there. We know that, listen, life is busy and it's full and there's a lot going on. So it's just our heart to be able to help. So if we shared some things that are helpful for you to take back to, if you have a Blue Trust advisor and say, hey, I've got some questions on this. I was listening to the podcast and how am I doing with my wills? Or I might need to get those checked out. Or if you say, hey, I really need help with this, feel free to let us know. We've got advisors around the country, and we're all serving with the same philosophy, the same investment team that's behind us. 45 years we've been doing this, and we haven't learned everything, but we've learned a lot. And it's just our joy to be able to serve clients and try to help them be the best stewards and be intentional with whatever it is that they have in their hands, so they can be purposeful with the life that they're living.
Thank you so much for listening to the Wisdom for Wealth for Life podcast, brought to you by Blue Trust. Thanks so much for listening, and please subscribe to wherever you listen to your podcasts. If you are seeking financial advice, please contact us at 800-987-2987. That's 800-987-2987. Or email us at info@bluetrust.com. That's info@bluetrust.com. Trust and investment management accounts and services offered by Blue Trust are not insured by the FDIC or any other federal government agency, are not deposits or other obligations of, nor guaranteed by any bank or bank affiliate, and are subject to investment risk, including possible loss of the principal amount invested. The information in these podcasts is provided for general educational purposes only. It is not intended as specific individual advice. The client's experience may not be representative of the experience of other clients, and they are also not indicative of future performance or success. Opinions expressed may not be those of Blue Trust.